Let's get straight to the point. You want to know what's the real returns of investment, which is ROI, in Dubai property. In this video, I'll show you ROI from long-term rent, ROI from short-term rent, and if you're a non-resident with no UAE bank account, how do you actually receive your rental income? Before I start, I want you to understand a few important points. The person who bought a property under construction at pre-launch 3 years ago and is renting it now, and the one who buys the same property ready today will have completely different ROI. Unless, of course, it's a distressed deal and the current owner is selling below market price. Prices 1, 2, or 3 years ago were much lower, but rent was also lower. Prices in Dubai are still forecasted to grow, so the one who wins is the one who doesn't overthink and can take fast decisions. Rental prices in Dubai are controlled by RERA index, and it depends on the quality of the building and its amenities. So even if two one-bedroom apartments are exactly the same, they can have different rental prices even if the buildings are next to each other. You have to set the right expectations depending on what stage you are at and what your investment strategy is. And one more point. Dubai is a young city. Every year, new buildings are being built. The same property can be sold multiple times. So don't think you are buying this property for your kids or grandkids. Most likely, you'll sell it in a few years. Also, tenants, especially high-profile professionals, prefer new buildings. So if you care who is going to live in your property, keep this in mind before jumping into a cheaper, older option. Let's go. In the first chapter, I want to talk about ROI from long-term rent. I'll show you renters examples in 3 areas: Business Bay, Creek Harbor, and JVC. All 3 areas have very different vibes. Business Bay is an older area located right in the heart of Dubai. It's busy, crowded, and full of commercial activity. Creek Harbor is a planned community built by one master developer. All the buildings are new, but the area is still under construction and not fully completed yet. It's about 20 minutes from downtown. And the third one is JVC, around 40 minutes drive to the city center. It has a mix of old and new buildings, and all of them are standalone projects from different developers. It's a popular area for families. Let's see what rental yields each of these areas are offering based on annually contracts with rent paid by checks. In Business Bay, one-bedroom apartment bought for 1.6 million dirham, rented for 110,000 dirham annually. That gives us gross ROI 6.9%. Service charge needs to be paid by the owner, around 20 dirham per square foot. This is the when size matters. For a unit with 700 square foot, the cost is about 14,000 dirham per year, which brings us to net ROI 6%. In JVC, one bedroom bought for 900k, rented for 78,000 dirham per year. Gross ROI would be 8.6%, minus service charge, which is around 9,000 dirham annually. Net ROI would be 7.7%. In Dubai Creek Harbor, two-bedroom apartment bought for 2.5 million dirham, rented for 170k annually. Gross ROI would be 6.8 minus service charge, bring us to net returns is around 6%. Let's speak about checks. Usually, if the tenant pays in one check, the rent is slightly lower. If the tenant asks to pay in 4 checks or more, you can increase the rent slightly. So this is something you keep in mind when calculating your rental income. As you can see, return of investment is not always higher in prime locations. Sometimes you get better returns in areas further from the city center. What really matters is when you buy, whether it's under construction already, whether you're buying at market price or getting a distressed deal, and if the building itself has a high RERA index, so you have room to raise the rent. Also, you can't raise rent however you want. Dubai has the RERA rental index, which tells you how much you are allowed to increase rent when renewing the lease. If your tenant is already paying close to market price, you can't increase it. So keep that in mind when calculating your future return of investment. You may ask me, what's better for ROI, ready or off plan? With ready units, you start earning rent immediately. You know exactly what ROI you are getting now, and it's stable. It's good if you are looking for passive income right away. With off-plan units, you buy at a lower price today, no rental income now, but the future rent will be based on future market prices. Rent is expected to grow 10 to 15% in the next 2-3 years, especially in new areas. You get higher capital appreciation. Property value goes up while it's under construction. Average price growth across Dubai is around 10 to 15% per year. So, if you want cash flow now, buy ready. If you want higher ROI long term, buy off plan. Now, let's talk about a return of investment from short-term rent, Airbnb or holiday homes. I'll show you examples in downtown and Furjan, both ready units but totally different areas. In downtown Dubai, which is super popular for tourists, one bedroom apartment price 2 million dirham, annual income would be 170,000 dirham, gross ROI 8.5%, management fee around 20%, this is the which you pay to a company that manages the property for you, net ROI 6.8%. In Furjan area, this is the high family demand plus tourist inflow, one bedroom apartment in a brand new building, price 1.3 million dirham, annual income 115,000 dirham, net ROI around 7% if done right with good management. So yes, short-term rent can give you even higher ROI if managed properly. Now moving forward, I want to show you a forecast example for off-plan property. This is for those of you who are okay with waiting a couple of years and want your property to grow in value before renting it. Let's talk about Dubai Islands. This area is fully under construction right now. It's forecasted to become a luxury beachfront destination, and prices are still low at the moment. So during the 2 to 3 years of construction, your property grows in value, and by handover time, all infrastructure is ready and demand is high. Here is an example. You buy a one-bedroom off-plan unit now for around 2 million dirham. Completion is in 2027. Projected rental rate by that time is 200,000 dirham per year. This projection is based on current prices in Palm Jumeirah, a similar beachfront concept, plus rental growth in Dubai. Forecasted gross ROI 10%, net ROI 9%. Don't forget, you already gain in capital appreciation during construction, maybe even 50 to 100%. So if you can wait 2 to 3 years, that could be one of the highest yielding options in Dubai. Let's finish with a practical question. If you don't live in Dubai and don't have a local bank account, how do you receive your rental income? Here are your options. Option 1, a property manager, it can be your real estate agent like me, can collect the rent and send it to you via international transfer. Second option, some rental management companies offer full service from tenant handling to income distribution. Third option, if your investment is about 1 million dirham, you can apply for UAE residency visa, open a local bank account and store your rental incomes there. So no, you don't need to live in Dubai, but having a proper setup makes everything easier. And yes, I can help you with that. So here is what you need to know. Long-term rent gives you around 6 to 8% net ROI, depending on the area. Short-term rent can give you up to 10% net ROI if done smart. Off-plan means no income now, but a much stronger ROI in the long run. And if you live abroad, you can still invest and earn from Dubai with the right support. If you want a full ROI breakdown based on your budget and goals, just message me or leave a comment below. And you might also want to check my next video, off-plan versus ready property, which is really better for investment in 2025. Link in description.